Q2 was a very unusual quarter. Very early on, we decided to put a number one priority on protecting our human capital. So not only about the physical health of our people, where we successfully implemented a lot of measures to protect the health of our employees worldwide on all the sites where we operate, but we also put a lot of emphasis on psychological and mental health, making sure that the teams were keeping together, that the teams were keeping a high level of motivation. We also decided during that crisis not to lay off because of COVID-19. And we have been able to record our highest ever employee net promoter score, at the end of Q2, which is the index that measures the satisfaction of our employees. I believe, Jeff, that this has helped us to adapt probably better, to show a lot of agility, to report strong financials in Q2, because despite a 25% decline, we've been able to maintain our profit margin at 9%, which is exactly the level of the 2019 Q2. And we've also been able to generate a free cash flow of 10.8% of sales, which is 37 million higher last year. So an unusual quarter, but a quarter of resilience for Signify.
A lot of the companies that are reporting this quarter, Eric, are finding it challenging still to provide any guidance. What is visibility like for the third and fourth quarter from where you sit?
I think you see it as I see it, Jeff. I mean, the uncertainty and is still there. The volatility is there also on a daily basis. I mean, our position is that we remain cautious but optimistic. Cautious because it's very difficult to predict what's going to happen. You see that the rate of infection is going back up in many countries. We don't know if these countries are going to go back to lockdown situations. For us, Q3 is very important, but also the month of September is the most important one in Q3, and it's very difficult to predict what's going to happen until then. But on the other side, we also optimistic because we've shown that we were capable to adapt to whatever we had in front of us. We did that in Q1, we did that in Q2, we'll do that in Q3. Another reason to be optimistic are some of the stimuli that are put in place by different governments at this point in time. We also believe in the Green Deal. The Green Deal is something that talks to us because as a company, we are targeting investments in climate change action in food security, circularity, safety and security, and health and well-being. We've talked lately about our investment in UVC lamp that eradicates COVID-19. So, I mean, we are cautious but optimistic for the future.
Good morning to you, Eric. We'll come back to COVID specifically and what treatments can help in a moment. I'm just looking through the full statement and looking at your CSG comparable sales growth as well. Are you disappointed that the rest of the world figures, the ones that include real potentially massive growth areas such as India and Southeast Asia, that they are the most disappointing CSG numbers at a negative 27.3 for the 6 months?
Well, in these countries, Stephen, we had complete lockdowns. We even didn't sell much for a period of 5 weeks, in a country like India. And India and the countries of ASEAN are quite important geographies for us. In China, where we had a serious impact in Q1, we recovered in Q2, but not completely. We are far from being at the historical levels. And then if we go outside of Asia, also in Europe, you have countries like France, Spain, Italy, and UK that have been fairly impacting because of the lockdown. So at the end of the day, we have what we have in front of us, Stephen, and we try to do the best with what we have in front of us. And the teams need to adapt locally. We need to adapt worldwide as a company to an economy which is very complicated to deal with at this point in time.